Really, the common denominator across asset classes this year has been pain. Is there any silver lining ahead as we look to 2023?
Well, eventually there will be a silver lining, but we think, unfortunately, there's a lot more volatility ahead. Certainly, the tussle between inflation and central banks and when the terminal rates will finally be defined is something that continues to unfold. And while we think that the Fed is likely to reduce the magnitude of its rate increases, it's hardly clear that they're done.
Certainly not. And when you look at sort of the economic backdrop here, Lori, give us a sense here of how you're reading it, because you can look at some of the economic data. It clearly shows a resilient economy, but there are certain pockets of that data that also shows material softening.
It does, and as we look into 2023, our overall macro picture is quite challenged. We're seeing growth slowing considerably and likely to be below trend. The problem is that there are still notable areas of strength. So labor markets, for example, continue to be quite strong, and we saw that in the employment report. You continue to also see inflationary pressures and impulses. So while we're starting to see, we think, the peak of inflationary pressures, it's hardly a situation where we're suddenly going to go into deflation.
And Lori, how do you think the Fed is reading that? Maybe we are approaching the peak of inflation, or it's already past us, but to the point that there's still a lot of pockets of strength in the economy. What does this mean for the Fed's tightening trajectory?
Yeah, they're going to keep applying pressure until they see sustainable improvements in the inflationary picture, and frankly, until they actually see the inflation prints come down pretty meaningfully. So let's say that they do a 50 basis point this December, for example, and they're going to sort of watch and be data dependent in real time. But if they continue to see inflationary indicators that are above their target rate, they have to keep pushing on the brake pedal. And the question is, do they push on that brake pedal so hard that the little bit of life that remains in the economy just gets exhausted?
Well, that's why a lot of people are wondering why they don't maybe, I guess, just take a pause for maybe just one meeting here, basically assess the lagged effect of what they've done. Why not? What's the argument against it?
Well, we actually think that they should. And in some sense, the movement from 75 basis points to something that's more likely to be 50 basis points and perhaps one more bite at the apple suggests that they're even having that debate amongst themselves. And as we know, at any point in time, they can take that pause, but it would be good for them to be able to see real-time data that suggests consistent abating of those inflationary pressures. If they start to get some of that, then they'll give them the opportunity to take that pause. If they still see hot prints, though, it's hard to envisage them taking a complete stop.